A lump of coal for investors as stocks dropped on a downward revision in GDP and a slowdown in business activity in the Northeast. We'll check in with some market pros to see if they think Santa will come to Wall and Broad this year.
2006 brought the biggest housing slump in 15 years. So how's next year shaping up? We turn to leading industry forecasters for an update.
Then, the maker of Cheerios gave Wall Street a cheery outlook today. General Mills' latest results and investor reaction coming up.
This has become one of the hottest selling toys of the season. We'll tell you what's fueling sales of the Nintendo Wii in tonight's Tech Talk.
I'm Paul Kangas.
And I'm Susie Garob. This is Nightly Business Report for Thursday, December 21st.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. 2007 is shaping up to be another difficult year for the U.S. housing market. Three of the nation's leading housing industry groups released their forecast for the new year, and they point to more declines in home sales and the number of new homes built. But as Washington Bureau Chief Darren Gersh reports, there are also some bright spots in the outlook.
With housing starts off 14% this year and inventories of unsold homes at a record high, the best news industry forecasters could offer up is that the bottom may be just a few months away.
This was a one-year, say, recession in housing, the recession of '06. The housing is coming back in '07, but very sluggish. This is not going to be a big expansion in housing. It's going to be a sluggish year, and everyone should expect that. Will there be price gains? Yes, but very modest price gains.
Leading industry forecasters for home builders, retailers, and the mortgage industry now expect housing to touch bottom in the next 3 to 6 months. The consensus forecast: new home sales will fall 15% in 2007. New home sales will be off 5 to 9%, and home prices are expected to end the year either up or down a percentage point or two. But those price forecasts are national averages. And in real estate, location is everything.
The usual suspects that will experience pain in '07 will be the west coast of California, and then the southern Florida and parts of central Florida. And then you can sprinkle some towns and resort areas up the east coast. And then you add Phoenix and Vegas.
At mortgage giant Fannie Mae, economist David Burson is a bit more bearish, predicting existing home sales will fall almost 8% next year. In the mortgage market, Burson says the big news will be in refis. After falling more than 30% this year, he expects an 8% rebound next year.
You know, you may want to finish your basement, you may want to redo your kitchen, you may want to send your kids to college. All of those are things that people use the money they take out of their homes for, and I think that will continue.
This consensus forecast reflects the industry's best guesses. More bearish analysts believe national home prices could fall 3 to 5% next year. That would be the first time that's happened since the Great Depression. Darren Gersh, Nightly Business Report, Washington.
Weakness in housing is a big reason why the government today downgraded its estimate of U.S. economic growth in the third quarter. The Commerce Department now says the nation's gross domestic product rose by only 2% for the period. That's lower than the previous estimate of 2.2%, as well as the 2.6% pace of the second quarter. Residential spending was revised sharply lower in the report, and that's why Moody's chief economist John Lonsky estimates growth in the fourth quarter will slow further to just 1.8%.
In the current quarter, the final quarter of '06, not only will GDP be dragged lower by yet another contraction of residential investment spending, it will also suffer from ongoing deep cutbacks by motor vehicle production.
Lonsky also points to a reduction in business orders, which has caused companies to cut production. He says that particularly applies to firms involved in the home building industry.
Stocks on Wall Street opened with small gains, which were soon erased as investors showed concern about that downward revision in third quarter GDP growth. There was also a pickup in year-end tax loss selling, which sent the Dow down 31 points by midday, while the Nasdaq was off 5 points. A sharp decline in the Philadelphia Fed's index of business activity in the Northeast put the market under more pressure this afternoon, pressure it did not recover from by the closing bell. The Dow Industrial Average ended off 42.62 at 12,421.25. The Nasdaq Composite lost 11.76, ending at 2415.85, while the Standard & Poor's 500 index lost 5.23 points to 1418.30. In the bond market, the 10-year note rose 13/32 to par and 19/32, putting the yield at 4.55%.
Although stocks were down today, there's still plenty of good cheer on Wall Street as investors prepare for the holiday weekend. Most of the major market averages are up double digits for the year, and the Dow has posted 21 record closes since October. As Erica Miller reports, the good tidings might not be over yet.
On Wall Street, it certainly looks like Christmas. It feels festive as well. That's thanks in part to a strong stock market rally that has recently pushed the Dow to record levels. The market, as tracked by the S&P 500, has gone up almost in a straight line since July. Joe McAlinden of Morgan Stanley Investment Management says there are many reasons investors have been rushing to buy stocks.
The assumption that's built into the market right now is that the economy is going to achieve a soft landing, which is the Goldilocks scenario, in which the economy slows enough that the Fed will in fact start lowering rates, but doesn't slow so much that profits get hit.
Seasonal factors may also be helping. Since 1945, December has been the best month of the year for the S&P 500, with an average gain of 1.8%. Strategist Sam Stovall of Standard & Poor's says stocks typically start the month strong, dip, then finish with a bang.
Usually we see a bit of a sell-off in the middle part of December as investors get rid of those dogs and make sure that they've locked in some tax benefits. But then they usually start to put some money back to work toward the latter part of December.
Investors have another reason to be optimistic about the market through year's end, a historical pattern known as the Santa Claus rally. According to the Stock Traders Almanac, stocks tend to surge in the last 5 trading days of the year and the first 2 in January. On average, since 1969, the S&P 500 gained 1.6% in that time period. But if history is any guide, the rally may be more muted this year. The Almanac points out that in midterm election years since 1950, the Dow has been basically flat in December. If the Santa Claus rally doesn't happen, there's reason to worry. According to the Stock Traders Almanac, Santa's failure to show often precedes bear markets. Erica Miller, Nightly Business Report, New York.
Defense contractor Raytheon said today it's selling off its aircraft business. The price tag, $3.3 billion. The division makes the Hawker and Premier lines of business jets. The buyers, Canadian private equity firm Onyx Partners and GS Capital Partners, which is an affiliate of Goldman Sachs. Raytheon says that the sale will take a chunk out of profits. It lowered its 2006 full-year earnings forecast by 40 cents a share and its 2007 estimate by about 20 cents a share.
Bristol-Myers Squibb will pay nearly $500 million to settle a drug pricing suit with the Justice Department. Federal prosecutors say the drug maker bilked insurers by overstating the average wholesale price for some of its drugs. The $499 million settlement will allow Bristol-Myers to avoid civil and criminal charges in the matter, pending a final review by the Justice Department. Bristol-Myers says the deal will lower its 2006 profits by about 25% and that it'll take a fourth quarter restructuring charge of $220 million. Meanwhile, Deutsche Bank will pay more than $200 million to settle state and federal charges related to the late trading of mutual funds by favored clients. The deal with the Securities and Exchange Commission and New York's Attorney General calls for the investment bank to pay a $20 million fine, refund $102 million back to clients, and cut its fees by $86 million over the next 5 years. The regulators claimed Deutsche Bank allowed some institutions to buy or sell mutual fund shares after hours, benefiting from potentially market-moving news. Deutsche Bank neither admitted nor denied the charges.
More now on our top story, the housing outlook for 2007. Sticker shock is what many homeowners can expect in the coming year. A record amount of adjustable rate mortgages will reset to higher rates in 2007. As Diane Estabrook reports, many consumers are either racing to refinance or bracing for higher mortgage payments.
Andy Ray bought this Tony home on Chicago's near North Side a little more than 3 years ago with a monthly adjustable rate mortgage, or ARM. But recently, the electrical contractor refinanced to a 5-year ARM before the interest rate on his original mortgage reset to a much higher rate.
The original mortgage 3.5 years ago had a teaser rate for the first month at 2 3/4, and then it started out at 3.6%. And the month before we refinanced, it was at 7 3/4.
Many consumers who used ARMs to jump aboard the home buying bandwagon a few years ago could get whiplash next year. The Mortgage Bankers Association estimates that up to $1.5 trillion in adjustable rate mortgages are scheduled to reset to higher rates next year. The MBA predicts roughly half of that amount will reset to a higher interest rate, while the rest will be refinanced. Wells Fargo is sending reminders to customers up to 6 months before a reset is scheduled to happen. The company's Northeast Division Manager, James Linnane, says in some cases, borrowers may be able to get a lower interest rate and reduce their monthly mortgage payments.
It really depends on the kind of loan that somebody took, their credit score at the time, et cetera. So all those variables could be different today. And yeah, it's possible that their rate could actually go down.
Still, some homeowners won't be so lucky and will have to shoulder higher interest rates. Economists say those are consumers who had to stretch to get into a home in the first place and now live in areas where housing values have been depreciating. LaSalle Bank chief economist Carl Tannenbaum fears those borrowers might be hard-pressed to make mortgage payments.
Obviously, you still have to have a certain percentage of value relative to the loan that you're taking out. And if your home has declined, you might have trouble refinancing easily. So it's those families that are getting hit with a double whammy of an upward adjusting rate and a housing market that is softer in their particular area that might be most at risk.
Still, Tannenbaum doesn't think the threat of higher mortgage payments for some will put the overall economy at risk. And experts say a much softer housing market next year could compel the Federal Reserve to cut interest rates and help higher-risk borrowers refinance to lower mortgage rates. Diane Estabrook, Nightly Business Report, Chicago.
General Mills shareholders were in a cheery mood today after the cereal giant posted strong quarterly results. The maker of Cheerios earned $385 million, or $1.08 a share, in its fiscal second quarter. That topped analyst forecasts by a nickel. General Mills also owns non-cereal brands like Yoplait and Progresso and says its sales have grown across all divisions. But its biggest gains came in international markets, where net sales jumped 15%. The company also upped its earnings estimates for the full year to as much as $3.13 a share. Paul?
Well, Susie, General Mills shares gained 96 cents to close at $58.95. Now let's look at our other stocks in the news tonight. Most active big board issue today on 19.8 million shares. Ford Motor losing 2 cents. Edmunds.com, a website which follows the U.S. auto market, says Ford will slip down to become the number 3 U.S. automaker in 2007 as Toyota overtakes it on sales volume. AT&T on heavy volume up 22 cents. First Data Corp gained 3 cents, even though the company said 2007 earnings will be $1.20 to $1.26. That's down from the street consensus of $1.36. GE in there with a 10-cent loss. Pfizer, fifth in volume, down 14 cents a share. EMC, a 2-cent drop there. Citigroup fell 40 cents. Bell South on active volume up 59 cents. ExxonMobil lost 21 cents. And Advanced Micro Devices, 10th in volume, down 90 cents. Conagra Foods, this is the big packaged food company, closed up 49 cents. It traded $1 higher than that this morning after the company reported strong second quarter earnings, 43 cents up from 29 last year and 10 cents better than the street consensus. Company went on to boost full year earnings forecast to as much as $1.33, well above the street estimate of $1.26 per share. A.G. Edwards, the big brokerage firm, up $2 too. Third quarter earnings up 50% over last year to $1.03 versus 67 cents then, and that was 12 cents above the Wall Street estimate. Stock did nicely today. Accenture Limited, a big consulting firm, in with strong first quarter earnings, 46 cents up from 36 last year. Revenues up 14%. Those earnings 4 cents above the street estimate. And the Robert Baird brokerage upgraded the stock from neutral to outperform with a $39 a share target. Actuant down $1.97. This company markets construction tools, things like that, and it said second quarter earnings would come in around 67 to 71 cents, well below the street estimate of 74 cents a share. J-Bill Circuit tumbled $2.44 after the close yesterday. The company forecast second quarter revenues will be about $2.8 billion. The street estimate up there at $2.91 billion. There were no earnings reported yesterday because of an ongoing stock option grant investigation. Today, the Jefferies and Credit Suisse brokerages both downgraded the stock from buy to just a hold rating on J-Bill. TNS Corporation up $2.32. This company provides credit card services, and Dunluce Acquisition Corp has made a conditional buyout bid priced at $20 a share in cash. Movado Group, the big watchmaker stock, is going to be added to the Standard & Poor's Small Cap 600 Index on a date to be announced. Index funds in there buying some Movado. Google topped the active list on NASDAQ, down $6.70. Followed by Apple Computer off $1.86. Research in Motion fell $1.05. Intel losing 23 cents, and Microsoft down 11 cents, fifth in dollar volume. And some more losers fractionally. Cisco Systems off a dime, similar loss in Yahoo. eBay down 78 cents. Applied Materials fell 31 cents. But Seprecor moving up $4.93. The drug developer got an upgrade in the price target by Standard & Poor's by $5, up to $65 a share. Praxis Pharmaceuticals, look at that percentage gain, 144.5%. This is a biopharmaceutical company, develops drugs, and it's going to be acquired by GlaxoSmithKline for $5 per share in cash. Horizon Health Group up $3.23. Psychiatric Solutions will acquire this firm for $20 a share in cash. And then we see Sky Financial Group rising $3.40. Huntington Bank shares will acquire it for cash and stock worth about $28.23, $3 of it in cash. Then a major loser, International Assets Holdings. This is an international trader of stocks, bonds, and commodities, and they had a rough fourth quarter, a loss of 25 cents a share versus earnings of 13 cents a year ago, and revenues tumbled 42% in the quarter. Those are the stocks in the news tonight. Susie?
Paul, Delphi has a new option for its bankruptcy reorganization plan. Hedge fund Highland Capital Management today offered Delphi up to $4.7 billion. The move comes just days after an investment group led by Cerberus Capital offered the auto parts maker almost $3.5 billion to fund its reorganization. Analysts say Highland Capital's proposal could set up a battle for control at Delphi. Highland is Delphi's second largest shareholder with an 8.8% stake in the company. Delphi's been in bankruptcy for 2 years and hopes to exit Chapter 11 by spring.
Tomorrow, our Friday Market Monitor guest is Thomas J. Hertzfeld, president of Thomas J. Hertzfeld Advisors.
Here's a look at what's happening tomorrow. Several economic reports come out, including durable goods orders, personal income and spending, and the University of Michigan's final look at November consumer sentiment. When it comes to gifts this holiday season, it's been all about electronics. In tonight's Tech Talk, a look at what's left on store shelves and a new act from Adobe Acrobat.
'Tis the season to buy, and with tech prices seemingly being cut every hour, gadgets are flying off the shelves, with big screen televisions leading the way. The discounts have analysts worried. They say the deep cuts in retail prices may be increasing revenue, but fear they will be decreasing profits as margins disappear in the blizzard of sales. Toshiba has canceled plans to show off a new kind of big screen TV at the Consumer Electronics Show set for January in Las Vegas. The long-awaited SED, for Surface Conduction Electron Emitter Display, is said to offer a better picture than the current plasma and LCD screens. It was first expected to hit retail stores last year. The most sought-after tech product this year, Sony's PlayStation 3 video game console, is in short supply and is almost impossible to find. Prices on eBay are running about $200 over list. You'll have better luck finding Nintendo's Wii, a lower-priced game system with a unique controller which senses your movements. However, Nintendo has had to offer to replace the wrist straps with heavier models after reports some unusually exuberant players have sent controllers flying across the room. The PS3 and Wii woes are good news for Microsoft's Xbox 360. The high-powered player, introduced 1 year ago, has a growing list of software titles, and supplies are matching demand. Adobe has just released a new version of its Acrobat software. Acrobat 8 sports several dramatic improvements. Many add features which used to require the purchase of third-party add-on products. We especially liked the Forms Wizard, which can take a form scanned from paper or designed in a graphics program and automatically create fill-in-the-blank form fields for computer processing. Another feature redacts material. That's lawyerese for removing. There have been many cases where authors thought they had deleted parts of documents, only to discover the deletions could be undone. Acrobat now makes sure what's gone is really gone. It even checks the usually invisible document information known as metadata. Adobe has also added utilities enabling an author to call a meeting using the Adobe Connect service. Collaborators can see and hear each other and share documents as they work together to produce a draft. There is a monthly service fee for Adobe Connect. If all you need to do is create a PDF document from your work, you'll find the technology already built into many applications and available to others from inexpensive add-ons. But if you need the robust set of tools found in the full Acrobat product, you'll find Adobe Acrobat 8 a worthwhile upgrade. Scott Gervey, Nightly Business Report, New York.
Recapping today's market action, the Dow dropped 42 points, while the Nasdaq Composite fell 11 3/4 points. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org.
While tis the season, tonight's commentators suggest that besides being a buying opportunity, this time of year is also a learning opportunity. Here's Richard Levin, columnist for the Boston Business Journal and author of Shared Purpose.
This is the season when we spend more time shopping than any other time during the year, and that creates quite an opportunity. For retailers, it may be a one-time chance to capture that often elusive quality called customer loyalty. And for consumers, it's an opportunity to learn that the customer relationship is a two-way street. First, a suggestion for retailers. Whether you're selling in a store or online, make it easy for the customer. Make it easy for them to find what they want, easy to ask questions, and easy to get answers. Understand that your customer can enter your company through any channel you've made available and may want to seamlessly move between those channels, like ordering online and picking up in a store. Make it easy. And for the people who are interacting with your customer on the front lines, be serious about recognizing good work. When employees exceed your expectations, make sure they know you appreciate it. And finally, a suggestion for the customer. In this harried time of year, your stress level is even higher than usual. So don't take your anger out on the salespeople. Ask for a manager, write to the company's president. Let the company know not to do stupid things to the customer. Businesses spend enormous time and money attracting new customers and devote relatively few resources to holding on to the customers they already have. So in this holiday season and the new year, invest with more respect and civility in the two-way relationship known as customer care. I'm Richard Levin.
And that's Nightly Business Report for Thursday, December 21st. I'm Susie Garup. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments. After 50 years of worldwide investing, we see market opportunities through the eyes of experience. Franklin Templeton Investments. Gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Oregon talents like Sopa Julie Van